In this video, I'm going to reveal to you one of the most important secrets that is held by the majority of traders. I can tell you guys, what I'm going to reveal to you in this video is something that 90% of people out there don't know. All right? It's possible you may not know it either, but guys, I can assure you this is going to probably shock you what I'm going to tell you in this video. It's one of the key secrets that majority of traders, professional traders know this, but again, most folks, the majority of people out there, I'd say 90% of people out there don't know this key important secret. So what is it? You see, guys, the assumption that majority of people have about traders, financial traders, or money managers is, oh, they probably spend long hours of time looking at fundamental reports about the economy, central bank statements, what the Federal Reserve Chairman has been saying recently, the jobs report, pouring through jobs reports, central bank statements, all that kind of fundamental mumbo jumbo. The fact is, guys, it is complete bunkum. It's complete bunch of garbage. No, here's the truth. And it's revealed in this fantastic book. I highly recommend you get this book and read it. It's called The Complete Turtle Trader by Michael Covel. Guys, when I first read this book, over a decade ago now, this is ages ago I read this book, it completely blew my mind because it's confirmed something I already knew about financial traders, about the big fund managers and money managers. And you're going to learn about it today. You see, guys, so again, the assumption most people have, again, before we take a look at the slides, the assumption people have of traders is, they pore over fundamental data, or they look at the news reports. They look at news reports, news narratives, bunch of nonsense. Here's the truth. Let's go to page 161. It talks about, you can see that it talks about Jerry Parker, one of the world's top traders. In this particular section, it says this: like his mentor, Richard Dennis, Parker, again, Jerry Parker, wouldn't consider monitoring multiple voices at the Fed to make a trading decision for a nanosecond. And he says that Parker actually believes, and he says this in his disclosure, that future price movements in all markets may be more accurately anticipated by historical price movements within a quantitative or technical analysis than by fundamental economic analysis. Wow. So essentially he's talking about fundamentals, what is not important. It's what is technical that is important. Let's go to the next slide. So in this one, he says, over his career, Parker has repeatedly gone out of the way to educate everyone that technical traders need no particular expertise in the markets they trade, saying they do not need to be an authority on meteorological phenomena, geopolitical occurrences, or the economic impact of specific worldwide events on a particular market. And it says at the end, that logic can be hard for people to accept. Investors want big money potential along with a sophisticated story that makes sense fundamentally. Let's leave that for a second, guys. So that is just huge when you think about it, guys. And by the way, there's a section in this book when he talks about Jerry Parker looks at simple moving averages. He looks at moving averages to analyze charts. There's also another section here, which I want to read you on page 163, where he says that the odd truth about fundamental traders is that behind closed doors, they often trade very similar to Parker, in other words, using technicals. And he says they might talk about a NASDAQ being down 40%, but actually looking for trends. They're looking for trends and buying opportunities, that kind of thing. So guys, this is really huge. It's really fantastic when you think about it, because the bottom line is, by the way, this is really interesting because Parker had to explain to his clients, well, he couldn't explain to his clients anything to do with technicals. In fact, in this book, it explains that most traders like Jerry Parker have a hard time explaining to their own clients how they trade, because most people want fundamental news narratives, fundamental stuff about jobs reports and things like that. They cannot understand chart technical analysis. You try talking about chart analysis to your client or to somebody out there in the street, they wouldn't have a clue what you're talking about. You might as well be speaking gibberish. Yeah, hello. Jerry here. Hey, Jerry, what's going on with the market? It's going down. It's tanking. What the heck is happening? Yeah, so basically what's happened is that the price has broken key market structure. And what that simply means is that we've broken a key support level, because the more often price comes down to test a key level, the more likely it is that it's going to eventually break it. And because we've broken market structure, that of course is detrimental, because that means there's now more momentum and there's more selling pressure to push us towards the next level of support. And we're also below the key moving averages. We're below the 50 and the 100 moving averages which means now the pressure is to the downside, and we could see further momentum gathering towards the next level of support. And if we break that level of support, that actually could gather more momentum towards the next key support level. Jerry, what the heck are you talking about? I don't understand a word you just said. I mean, you might as well be talking gibberish. Can you speak in English, please? Okay, so the central bank has just made a recent interest rate decision. President Trump has tweeted out something about China, and there's been a jobs report showing some weak numbers. So, you know, yada yada yada, la-di-da, blah blah blah. Oh, thanks, Jerry. Now I understand. Okay, that makes sense. By the way, Jerry, I was listening to Fox News, CNBC, and CNN, and they were saying that the markets are falling. The markets are falling. Do you think the markets are falling because of the impeachment process? So, very fantastic book, guys, because it confirms, guys, forget fundamentals, bunch of nonsense or news narratives. As Bernard Baruch once said, show me the charts and I'll tell you the news. Not, hey, let's go watch the news and then look at the charts. All right, guys. So really fantastic and a huge mind-blowing lesson there. Thanks very much indeed, guys. I look forward to seeing you in the next video. Cheers.
So that's the key, I think, for a lot of traders is small losses, be bold with your profits, hang on, and get yourself in a situation where you can be tough and strong and not get out too quickly. I think more money is lost anticipating a trend reversal. Even as painful as a trend give back will be, you know, it's mostly just embarrassing though, or it's just kind of like emotional. Put up a weekly chart and scroll through the charts. Massive trends just pop out. And you look at the little jig, you know, in the middle where it goes down a little bit and comes right back, like, oh, it's a piece of cake. You blow it up into a daily. Yeah. It's like, oh my God, or you live through it.